Hello everyone, welcome back to Stock Market Meridian. Today is 11th August 2026 and you are watching today's post-market report. Yesterday, we saw selling pressure build up as the session progressed and today the market followed almost the same script once again. The opening was calm, but the selling pressure slowly intensified. So what exactly happened today? And more importantly, why did the market suddenly stabilize around midday only to finish in the red? We also have some major developments today, from the Panama Canal and gold prices to the SEBI closing auction controversy, PSU stake sales, Tata Group leadership changes, defense orders, MCX, JSW Energy, and several major company updates. So let's break everything down one by one. Today, the Indian markets opened almost around yesterday's closing levels, but the calm opening didn't last for long. Selling pressure gradually increased from the morning and continued until the middle of the trading session. Around 12 to 12:30 p.m., the market finally started showing some stability. Buyers stepped in and attempted to recover the losses, pushing the indices higher from their intraday lows. However, the recovery wasn't strong enough to completely reverse the day's trend. And finally, the Indian markets ended the session in the negative zone. Coming to sectoral performance, the top losers today were IT and FMCG sectors. On the other hand, the top gaining sectors were PSU banks and media. So overall, it was another volatile session where the market struggled to build a strong recovery. Now let's move to today's top news. Imagine paying $4 million just to jump to the front of a queue. Sounds unbelievable, right? But that's exactly what happened in the Panama Canal. A container vessel reportedly paid a massive $4 million auction fee to secure priority passage through the canal. The vessel, Seaspan Benefactor, paid this amount to bypass the waiting queue, more than double the average premium seen over the previous 7 days. And remember, this $4 million priority fee is paid on top of the regular transit tolls, which themselves can cost hundreds of thousands of dollars. The vessel was last tracked waiting on the Pacific side of the canal, preparing to transit northbound towards Atlantic trade routes. So why are ships willing to pay such enormous amounts? The Panama Canal is currently facing significant traffic pressure because of a combination of geopolitical rerouting, maintenance work, and weather-related restrictions. Ships that haven't booked transit slots in advance can participate in daily auctions for last-minute priority slots. For some large Neo-Panamax vessels carrying LPG, LNG, crude oil, and containerized cargo, waiting times have reached as much as 10 days. And this is particularly important because disruptions around the Strait of Hormuz and Bab el-Mandeb have forced more energy and cargo traffic to reroute through the Panama Canal. At the same time, maintenance work on the Neo-Panamax locks is expected to continue until September, restricting daily vessel throughput. Reduced rainfall has also affected canal operations, forcing authorities to lower maximum vessel draft levels. So this is not just a shipping story. Higher transportation costs and longer shipping routes can eventually affect energy prices, commodity prices, inflation, and global trade flows. Now let's move to precious metals. Both gold and silver opened higher on domestic exchanges as traders waited for crucial US inflation data. Gold futures for October 2026 delivery rose by around 1200 rupees, reaching approximately 1,54,950 rupees per 10 grams. Silver futures for September 2026 delivery jumped around 2,612 rupees, reaching approximately 2,38,271 rupees per kilogram. Precious metals continue to receive support from ongoing Middle East geopolitical tensions and shipping uncertainties surrounding the Strait of Hormuz. But today's bigger trigger is the US Consumer Price Index data. Why is this inflation data so important? Because it could influence expectations around the Federal Reserve's future interest rate decisions. Following last week's weaker than expected US employment report, probability bets around a September Fed rate hike dropped to around 48%. Now, the latest CPI data could provide another major signal. At the same time, crude oil prices approaching $90 per barrel continue to create concerns about inflation. So, investors are closely watching the balance between inflation, crude oil prices, and interest rate expectations. Now, let's come to one of the biggest market-related developments of the day. Retail traders across India are participating in a no-trade day protest against SEBI's newly introduced Closing Auction System, or CAS. Traders argue that the new system is creating extreme volatility during the final minutes of trading and causing unpredictable repricing in options. Under the new mechanism, the closing auction takes place during the 3:15 p.m. to 3:30 p.m. window. According to traders, the equilibrium price can fluctuate dramatically within seconds, creating significant uncertainty for option buyers and sellers. The Indian Retail Investors and Traders Association, or IRITA, has also appealed to SEBI and stock exchanges to delink weekly options expiry from the closing auction mechanism and restore the earlier 3:15 p.m. settlement logic. And the numbers are interesting. Options trading volumes reportedly declined by around 46% during the first 6 trading sessions after CAS implementation, compared with the 23-day trading average in July. Overall derivatives notional turnover declined around 27%. An analysis by Bernstein also showed that trading volume during the final 15-minute window fell to just around 1.6% to 2.3% of daily NSE turnover, compared with a historical average of approximately 10.1%. But SEBI has a different perspective. The regulator has stated that it has not observed price manipulation in the new closing auction session. SEBI says the new system is designed to create a fairer and more transparent closing price, while also improving execution efficiency for institutional investors and reducing tracking errors for passive index funds. And institutional participation does appear to be increasing. Mutual fund participation reportedly increased from around 5% to 6% on day 1 to approximately 20% to 25% in recent sessions. So there are clearly two sides to this story. Retail traders are concerned about volatility and unpredictable option pricing. SEBI meanwhile believes the system needs time to settle and that liquidity will improve as institutions and algorithmic trading systems adapt. But here's what happened in today's market. During the final 15 minutes, Nifty rallied nearly 74 points, forming what looked like a clear Marubozu-style candle. In simple terms, the move was almost entirely one-directional, with very little interruption from the opposite side. So the debate around the new closing mechanism is definitely something traders will continue to watch. Now, let's move to the government's disinvestment pipeline. Following its landmark 6.5% stake sale in LIC, the government is preparing its next wave of offer for sale transactions. The companies in focus include Hindustan Zinc, Hindustan Copper, Mazagon Dock Shipbuilders, and IRCTC. Merchant bankers have already been appointed, indicating that the government is preparing for an active disinvestment pipeline in FY27. Hindustan Zinc and Hindustan Copper are currently among the top priorities. The government is reportedly looking at approximately 1.5% stake in Hindustan Zinc and around 5% each in Hindustan Copper, Mazagon Dock Shipbuilders, and IRCTC. Although the percentage for Hindustan Zinc is relatively small, its large market capitalization makes the transaction significant in absolute value. The government recently completed its largest stake sale of the fiscal year by selling 6.5% in LIC at a floor price of Rs 382 per share. According to DPAM data, FY27 receipts have already reached around 61,638.61 crore rupees. That includes approximately 52,716 crore rupees from disinvestment, 6,367 crore rupees from asset monetization, and around 2,556 crore rupees in dividend receipts. So PSU investors should keep an eye on these upcoming OFS transactions. Now coming to the defense sector, the Indian Armed Forces are advancing procurement plans for long-range loitering munitions, commonly referred to as kamikaze drones. The requirement reportedly focuses on systems capable of operating across a range of approximately 500 to 1,000 kilometers. The procurement would cover the complete ecosystem, including aerial vehicles, warheads, launchers, ground control stations, data links, and simulators. This is particularly important for India's growing focus on long-range precision strike and surveillance capabilities. Domestic companies are also developing systems in the 1,000-kilometer class, including technologies involving AI-based targeting, satellite connectivity, and extended flight endurance. One company already active in this space is Solar Industries, through its subsidiary Economic Explosives Limited, which supplies indigenous loitering munitions such as the Nagastra series. So the broader trend here is clear. India's defense procurement is increasingly moving towards indigenous, long-range, and technology-driven systems. Now, one of the biggest corporate developments of the day. Tata Group stocks came under pressure after Tata Sons chairman N. Chandrasekaran announced that he will step down and will not seek reappointment when his current term ends on February 20, 2027. Chandrasekaran has informed the Tata Sons board that he will complete his existing term, but will not seek another term as chairman. He has also asked the board to identify a successor early to ensure a smooth leadership transition. Chandrasekaran joined the Tata Group in 1987, became CEO of TCS in 2000 2009 and took charge as chairman of Tata Sons in 2017. Following the announcement, uncertainty around the group's future leadership triggered selling pressure across several listed Tata companies. TCS fell nearly 5%. Tata Consumer Products declined around 1.6%. Titan fell around 1.3%. Meanwhile, Tata Steel and Indian Hotels also declined by more than 1%. Other Tata Group companies, including Tata Motors Passenger Vehicles, Tata Investment Corporation, and Tata Technologies also traded lower. So the market's reaction shows just how important Tata Sons leadership is for investor sentiment across the wider Tata ecosystem. Next, let's talk about Godrej Consumer Products. The stock plunged around 10% in early trade, hitting the lower circuit after the sudden resignation of Managing Director and CEO Sudhir Sitapati. Sitapati resigned with immediate effect, saying that his primary tasks at the company had been completed. The board has appointed Asif Malbari, the company's Group CFO and Africa CEO, as the new Managing Director and CEO for a 5-year term. Meanwhile, Vishal Kedia has been appointed interim CFO. The stock fell to around 922.50 rupees, bringing the company's market capitalization below the 1 lakh crore mark. Interestingly, brokerages have taken different views. Jefferies maintained a buy rating with a target of rupees 1400. Citi also maintained a buy rating with a target of rupees 1350. However, HSBC downgraded the stock to hold with a target of rupees 1120, and CLSA retained its underperform rating with a target of rupees 772. So the key issue for investors now is whether the leadership transition will impact execution and the company's growth strategy. Now coming to MCX. Shares of MCX gained more than 2% after SEBI released a consultation paper proposing to allow foreign portfolio investors to participate in physically settled non-agricultural commodity derivatives. Currently, FPIs are restricted mainly to cash-settled non-agricultural commodity contracts. The proposed changes could open the door for greater foreign institutional participation in India's commodity derivatives market. Bullion and energy contracts could be among the major beneficiaries. To manage delivery risks, FPIs would reportedly have to exit or roll over their positions 3 days before the physical delivery period begins. Brokerages reacted positively. JP Morgan upgraded MCX to overweight and raised its target from rupees 2,560 to rupees 3,500. Jefferies maintained its buy rating with a target of rupees 3,600. According to estimates, increased FPI participation could provide a meaningful boost to MCX's earnings, and the stock has already delivered strong returns. MCX has gained more than 13% in 1 week, around 33% in 2026 so far, and nearly 79% over the past year. Over 3 years, the stock has delivered a massive return of more than 828%. So, this SEBI proposal could become another important structural growth trigger for MCX. Next, a major development for JSW Energy. JSW Neo Energy has signed a shareholders agreement with Bhutan's state utility Druk Green Power Corporation to jointly develop a massive 920 megawatt hydropower project. The project is the Punat Sangchu 3 hydroelectric project in Bhutan. It will be developed on a build, own, operate, transfer basis through a joint venture. Druk Green Power Corporation will hold 51%, while JSW Neo Energy will hold 49%. This marks JSW Energy's first power generation project outside India. The company currently has around 32.4 gigawatts of locked-in generation capacity, including operational capacity, projects under construction, and its development pipeline. JSW Energy also has significant hydro and energy storage capacity and is targeting 30 gigawatts of generation capacity and 40 gigawatt hours of energy storage capacity by 2030. So this Bhutan project is strategically important because it expands JSW Energy's presence beyond India while strengthening its renewable energy portfolio. Now, here's an interesting stock-specific update. Bajel Projects received 2 major orders on the same day, with the combined value representing a substantial portion of the company's market capitalization. The first was an ultra-mega EPC contract worth more than 400 crore rupees from Power Grid Corporation of India. The project involves the construction of 765 kV double-circuit transmission lines and is expected to be completed within 33 months. Then came the second order. Bajel Projects received another ultra-mega order worth more than 600 crore rupees, including GST. The project involves transmission lines connecting Raigad, Tamnar, Raigad Kotra and Dharamjaygarh in Chhattisgarh. The project is part of the Western Region Eastern Region Inter-Regional Network Expansion Scheme. And here's the interesting part. Bajel Projects has a market capitalization of roughly 2200 crore rupees. So an order book addition of this size is significant compared with the company's current valuation. The first order announcement came during market hours, while the second came after the market closed. So tomorrow, this stock could definitely remain in focus. Next, Coal India.
the company has entered into a non-binding memorandum of understanding with ArcelorMittal Nippon Steel India.
The agreement will explore the possibility of using syngas produced from a proposed coal gasification facility. The facility is proposed to be established at or near the AMNS Paradip pellet plant in Odisha. The project is also expected to explore carbon capture, utilization and storage or CCUS technologies. For now, both companies will assess the technical, commercial and implementation aspects and prepare a preliminary feasibility report. So this is still an early stage development, but it highlights Coal India's push toward coal gasification and cleaner coal-based technologies. Now, let's quickly cover today's major quarterly results, starting with Hindustan Aeronautics. Revenue, EBITDA, net profit and margins showed strong improvement on a year-on-year basis. However, the numbers declined on a quarter-on-quarter basis. And this is not necessarily a major concern in the defense sector, because defense companies often see a significant portion of deliveries and revenue recognition during the fourth quarter. So despite the sequential decline, the overall quarterly performance remains strong and positive. Next is Grasim Industries. The main negative was a decline in revenue on a quarter-on-quarter basis. Apart from that, the remaining key earnings parameters showed strong improvement. So overall, Grasim's quarterly performance was very strong. And that's all for today's post-market report. Today was another session where the market struggled with selling pressure, while the final part of the session once again showed how important the new closing auction mechanism has become for traders. At the same time, we saw major developments across Tata Group, PSU disinvestment, defense, commodities, energy, infrastructure, and corporate earnings. If you found this analysis useful, make sure to like this video, share it with your fellow investors, and subscribe to Stock Market Meridian. I'll be back tomorrow morning with another detailed pre-market report before the Indian markets open. Until then, trade carefully, stay informed, and never let the market control your emotions. Thank you so much for watching. Signing off, Jai Hind.